Welcome to Shortview Trading, it's your morning market hit for Friday, 3rd of July. What matters today for traders? Well, yesterday was a fascinating trading session. In particular, the behaviour of bond yields and the way it fed into the sector performance of the equity market was intriguing. Of course, yesterday was a key data point for non-farm payrolls, one of the key monthly data points that we get at the start of each month. Payrolls were much better than expected, coming in 4.8 million. The market was looking for about 3. Added to the revision to the prior month, about 5 million jobs, 2 million more than were expected by the market. Now, of course, initially bond yields did what you would have expected. They backed up sharply. But what's fascinating is the way they faded throughout the session. And in fact, you can see that on the chart we're putting up in front of you now, the sort of 5-day tick chart on 10-year bond yields. An initial spike on the data and then a fade as we go through the rest of yesterday's trading session. And indeed closing sort of flat to slightly down on the prior day. Now with that, of course, that had a strong influence on the way sectors performed over the course of yesterday's session. And are an interesting example of how the whole of the global financial markets fit together like one big puzzle. And in particular, what we saw yesterday was on the back up in bond yields. Tech was slightly underperforming the better performing cyclicals and the broader S&P 500 index. The Russell 2000, the Dow, etc. all were doing better as bond yields backed up. But as we went throughout the trading sessions and bond yields faded, that reversed and tech ended up the session only modestly, but still higher than the broader S&P and some of the other cyclical areas of the market. So that's a pretty clear insight into the importance of bond yields within the trading session and across trading sessions. And in that respect, it's fascinating. If you look at bond yields over the last few months, they're basically, as you can see in chart in front of you now, pretty much flat as a pancake. With that, you can see how global banks in this chart now really follow the pattern of bond yields. So global banks here on relative to global equity markets are plotted against the US 10-year bond yield. The two move pretty tightly together. So where the macro goes, where the bond yield goes, so goes a whole bunch of sectors within the equity market. And of course, this whole theme plays into exactly what we were talking about in yesterday's video, Thursday, 2nd of July. Please do take a look, where we're talking about the bifurcation of the market and thinking about the S&P 500. It divided into 3 key areas: cyclicals, defensives, and long duration growth. And of course, yesterday, once again, key parts of that, and indeed the main part of that long duration growth, the tech sector, the Nasdaq made a new record closing high, and of course continues to look very impressive, strong momentum, and indeed a number of our short-term models still supporting a long position in the tech sector. So for full detail on how we're playing it today, please see today's daily rag available to subscribers on the website. Of course, today is the Independence holiday in the States. The cash markets, the cash equity markets are closed. The futures are certainly open this morning in London. So what are we watching today? Well, of course, it's pretty light with the US closed, so no macro data out from the States. But in Europe this morning, you've got service sector PMIs, a final estimate and some initial country estimates. They'll be interesting. Other than that, fairly light. So that's it from us. That's your morning market hit for Friday, 3rd of July. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Simply search under Shortview Trading. Thank you for listening. Stay safe and trade well.